Next.
Thank you very much, Yuka, for that kind introduction. Okay, so why talk about tax in the sustainability context? I would say that taxation and fair taxation would be the economic part of the sustainability equation. And I will present 3 reform proposals for you today in order to achieve a little bit more economic sustainability in that regard. So, first and foremost, regulation that is addressing multinational corporations that also give them the possibility to structure their businesses in the way they do, and also very often for tax purposes, is because of regulation primarily being focused on the old-fashioned way of doing business. This leads us to a situation where only parts of corporate structures are subjected to regulation, and this also goes for tax purposes. I will give you then 3 reform proposals. The first one is that there is a need to reform the accounting regulations. And in EU we have the accounting directive and the accounting regulation. And in the accounting directive, targeting limited liability entities is not as harmonized as one may think it is. And also, we think that accounting standards for listed companies is quite harmonized, but still there is ample room for gaming, if you would like. For the listed companies, it's IFRS, which is the mandatory scope of showing which entities that is part of your group, and the whole thing is that it's based on an assumption that control only stems from shareholding. So an equity link. And why is it important to know which entities is form of an account and your consolidated account from a tax purpose? It's of course because if you cannot link 2 legal entities to the same group, then we will not look into transfer pricing issues, and you can then move money easily and contract with entities assumably outside the corporate group and have quite good benefits in that regard. Today, there is a number of different ways to control one legal entity, which is not based on traditional shareholding. My favorite topic in that regard is the use of multi-layered derivatives contracts, which most auditors that I know would never question when they are given the numbers and the evaluation from a company. Similar with smart contracts on closed blockchain platforms, as I will return to shortly. New ways of controlling legal entities that are not subjected by current accounting legislation. And in EU, we have for the listed companies, at least we have the IFRS as a form of standardization, but for the non-public, the private limited liability companies, there is no proper harmonization at all throughout Europe, which means that the qualification of de facto control varies quite extensively throughout Europe, which then again, a lot of other regulations depend upon that. We have more harmonized concept of what actually forms a corporate group, and without a reform of this, economic sustainability is difficult to achieve for tax purpose as well. The second aspect, smart contracts, closed blockchain platforms. Actually, today, I thought when I wrote my PhD thesis and I entered into the new world of blockchain technology and what it could be used for, I thought this would be something which would come. Now, working only 1 month in EY, I can say that this is not something which will come. It's definitely something that is. And why choose a blockchain platform for your corporate group? It has been said to be the technology that will ensure transparency for us all, but it can equally be used for the quite opposite purposes. For a closed blockchain platform, it's only the participants on that platform that has any sort of transparency. So if I sell the shares back to the subsidiaries, place them as participants on a closed blockchain platform, I can manage them through smart contracts, which will then guide them how they will, stream a profit or whatever. And I can have much more control through those means than I could ever have as a shareholder at a general meeting. Today, there is no jurisdiction in the world that has an obligation to disclose participation on a closed blockchain platform, We only regulate the usage of cryptocurrencies, and mostly bitcoins and the well-known cryptocurrencies. Those that are not listed, we still have quite a big problem of how to deal with, how to regulate. There is no agreement in EU whether a cryptocurrency should be addressed as a financial instrument or something different. Is it a liability or an asset? But on these closed blockchain platforms, we have an ample room for what I denote shadow business. You can actually also, for tax purposes, transfer money between entities without being guarded by tax legislation. And of course then the related party transactions and all of our tax regulation guarding those will not be applicable. Because if you make a good or bad deal with someone that appears to be outside of your corporate group structure, that is your own problem or your own profit, it's not a concern for tax authorities. The third one is, of course, the topic of tax havens, and what has come across over the years is all of these exchange of information contracts, and we have them now globally. Most tax havens have also now been subjected to these exchange of information contracts. We used to only have them on a question-based domain, but now we have them automatically. And the automatic exchange of information, they are very handy. It looks very good, that you will get all of the information from banks on Cayman Island and so on and so forth. However, you can only ask the information that you're able to receive in your own, if the company or the individuals were in your own jurisdiction. Meaning that if you cannot go to a lawyer in Norway to ask for the information that you need in order to actually entrench this corporate group structure, or if the position of being a part of a closed blockchain platform, you cannot go to Cayman Island and ask whether the Norwegian company or citizen is a part of a closed blockchain platform there either. So there has to be a mirroring effect of what you can ask for in your jurisdiction and what you're actually asking abroad. And this is something which is not that well communicated. We are talking about this that being one of the largest development in terms of tax transparency. But the effect of those agreements are no more effective than what you have of transparency means within your own jurisdiction. And here EU, of course, can take action and make also a common ground for transparency then of the intermediaries. That is often those who are being able to know all of the differences in different countries and know where to be situated and so on and so forth. So here is a need for a common ground in EU to have harmonized regulation in order for all of us, member states, to operationalize the transparency means that we think that we already have, which we may not. So then, three important reform proposals that is necessary in order for us in modern times to look into if we want to achieve economic sustainability of businesses. There is a crucial need to reform accounting standards. There must be a common ground for an understanding of what qualifies as de facto control in a corporate group setting. And this is of course because tax legislation leans upon a presumption that we have a common ground for de facto control. And even as said, for listed companies where we even more assume that we have harmonized grounds, there still is new ways of controlling, new ways of structuring businesses that falls outside the scope of regulation. And this of course goes hand in hand with regulating tomorrow's creativity, which will always be difficult, but still necessary to look into. New business models, closed blockchain platforms. And I'll have to say, it's actually so commonly used that it has its own acronym, it has its own name, decentralized autonomous companies. So just write it down, it's heavily used. And sometimes not as the sole platform, but often in combination with the old-fashioned way of structuring business. So you have one part of the group being controlled by traditional shareholding, but then if you're doing some kind of unsustainable business, if you're using some chemicals you don't want to disclose in your yearly reporting, then you take those companies out and place them on a closed blockchain platform, control them through other means. If you don't want to spend money to report on EU's initiatives on environmental and social impacts, what do? You look into those thresholds in those reporting initiatives, and you choose then which legal entities you want to form part of a consolidated account, which will be the basis for that regulation to be effective, and then the rest of them you control through different means. Similar with consolidated tax basis initiatives in EU, similar with country-by-country reporting initiatives in EU, all of those targets various thresholds which can easily be gained through various means of control, because we assume that you control one legal entity through shareholding or maybe some additional contracts, but there must be an equitative link. That's not necessarily longer the way of structuring business. And in addition, in that regard, we could also include, if you have disclosure of participation on blockchain platforms, we can then also include the extensive usage of internal cryptocurrencies on those platforms as well. And then finally, there is also a need to have common ground for disclosure of intermediaries and the role they play in terms of economic sustainability. And of course, several countries have now taken initiatives to also get more disclosure of lawyers and accountants and so on and so forth that are assisting, but it's not been discussed as this mirroring effect of actually operationalizing those international treaties that we have already in place. And it's always about posing the right questions, and then we should look more into how we can operationalize those transparency agreements that we already have in place.